Welcome back guys on my YouTube channel. Now in today's video I'm going to be explaining more about these there are four terms: spread, bid and offer price plus the margin call. Now stay with us till to the end of this video. I'll make sure this video not to be too long because I'm not going to talk about many things. Now do like and subscribe plus sharing this video, plus commenting down the description about videos you'd like us to make in the nearby future. Now feel free to send us direct messages whereby you try to interact with us about how are you going through all these forex journey of yours, so we can give you help. Plus hitting the link in the description, follow us on our social media platforms, plus joining our free telegram channel and signing up with our reliable forex broker, which is in Forex Capital. Okay, now starting with our notes today. Remember, when you enter or exit a trade, you are subject to the spread in the bid stroke offer price quotation. What does this mean? When you look at spread itself, spread is the difference between the bid and ask price. Now bid and ask price, these are the two lines where we like when you go to our charts. Let me give you a little bit example. When you go to our charts, so let me try to zoom out. Now these two lines, the red one and the blue one, so this is our bid and ask price, which is our spread. I think we are together. This is our spread for these two lines. Now when you're focusing on our bid and ask price, spread itself is the difference between the bid and offer price. Now the difference or the space between the bid and the offer price, that is our spread. When you buy a currency, it can be GBP pound, it can be Euro USD, it can be USD JPY. You will use the offer price when you are buying. So when you click buy, that means you're using the offer price. When you click sell, that means you are using the bid price. So when you're offering, when you're placing your trade, let me first go back to the charts. When you look at here, we have sell and buy. Now we say when you're offering, when you're buying a currency, you will use the offer price. So now when you come back to our charts, this is our buy button, so that means this is our offer price. When you are selling, this is our bid price. I hope now we are together. So when you buy a currency, you pay the spread as you enter the trade, but not as you exit. So you being taxed, or that commission being taken by the broker, it is when you execute a trade. Let me say you're buying, that small commission will be put on your trade, or which is called the spread, because you have placed a trade. Now if you pay for a spread, that means you have entered a trade. And when you sell a currency, you don't pay the spread when you enter, but only when you exit. Same to selling. When you sell a currency, you will not offering any price as in spread commission. But when you exit that trade of yours, that sell trade, and you exit it, that means you're going to be taxed by the broker through the spread. I don't know whether we are together. Now the difference between the spread is the bid and the offer price. We have said the offer price is when you are buying the currency, and the bid price is when you are selling the currency. Another point is called margin call. Margin call is the event that money in your account falls below the margin requirements. your broker will close some or all open positions. This prevents your social account from falling into a negative balance, even a highly volatile, fasting moving market. Now, let me say if you have $100 and you press like 0.50 lots, remember you have over 60 your account. Now this trade, if it doesn't come to your favor, that means your account will blow up. Now in this process of your account going up, remember you'll be using a lot of free margin. Your free margin will be lower than your equity. Now in that process, the broker will be available either for you to close your trades manually, or the broker can close your trades manual automatically. Because of your margin level lowering down, it can be 60% or 80%. It depends on the forex broker you are using. So now that margin call is what I was trying to explain. Now without wasting time, I think hit that like button, subscribe and like this video. If you have learned anything valuable, please press that like button. Signing up with our forex broker, which is called Forex Capital, is the most favorable forex broker we have used so far. Now for services, I think we offer MT4 stroke MT5 for trading softwares. Privilege you can use from 1 to 100 up to 1 to 1000. Leverage, you will be able to trade over 300 instruments. Now instruments, you combine commodities, currencies, indices, cryptos, all those, you will be able to trade them. You can use a lot size from 0.01 up to like 100, 500 lots. These are the partners Infinox has partnered with. Now, all this we are trying to bring you the proof of being using the broker called Infinox Capital. So don't even forget to join our Telegram channel, the free Telegram channel, plus following us on our social media platforms. Peace. We meet in another video.